Today is August 2nd, 2023. We have some MKTRedline warnings going off, which is an interesting thing because whenever that happens, you should be expecting a market drop. I'm here today with Leigh Duffy as always. Hey, Leigh.
Hey, Cam, how you doing?
I'm doing excellent. So we're going to talk about this. We're going to tell everybody how to keep their money safe. Let's do it. Leigh, we've got this MKTRedline spike. It has happened actually a few times. It's a pretty interesting one. So why don't you give everybody some details about that?
Yeah, so it actually is really interesting from a shape perspective, which we're going to show on screen. This is not a typical MKT redline spike. This is a prolonged into the 100 zone, into the red area from 70 to 100 for a prolonged period of time. And this is quite unusual. We're just really monitoring what that actually is going to mean.
Yeah, and you're right. I've never seen that. I mean, since I've been looking at this thing, I have never seen anything like that. Do we have some sort of interpretation on this? The hardest part about this is knowing what's going to happen. We don't know what's going to happen. We know something's going to happen when a situation like this happens. But, do we have any kind of interpretation on it?
Well, we do. We think that equities are well due to come down. We can see it on our Euro US dollar forecast. Let me show you that. We made a prediction on X that the market from Euro US dollar would come down into this zone, clearly showing it between 1.09335 and 1.077. And then we believed that the market would go up to make a new high at 1.146. Now, that was before we had this spike. So because we've had the spike, we really do believe that this move is going to carry on down into that area and then start to perhaps move up. Now, I've had people ask me, why do you think it's going to stop in this zone? And at the end of the day, we just know where it's going to stop in the zone. It's a pattern recognition problem. This is what's in the hologram. It's already baked in the cake. We know it should stop around 1.077 and move higher. There is a caution to this, and that is we have had the red line spike. If we get a 30% stock market crash, then, anything could happen.
Yes, and this is why we always say it's $9.99. If you're not going to get the risk index, if you're not a trader, if you're not a professional trader or something like that, at least get MKTRedline, because I've said it before on the channel. I lost $30,000 on a day. I wish I had this then. There's some sable rattling in North Korea about nuclear weapons, fire and fury and all this. The market dropped. And a lot of people, if you were in the market that day, you lost money. And that would have been great to have this. We don't know what this means. It could be that this is a time to move to safety, right?
Yeah. I mean, let's look at the shape on the risk index. It's really, really interesting. So the shape is just flying up. Now, we know that above this red line, we start to see things happening in the marketplace. That's our threshold. Below that, there are things going on in the volatility scale, but we don't expect market events below 41. We're way above that now. We're at 50. And 50 is a good size number. Anything could happen. It's possible that there is some deflationary processes going on, destroying money. There could be money being moved around that we can't always see. Something is going on in the marketplace and we need to be careful.
Well, this shows really, really well how you can use all the different tools together. We've got Ghost making a prediction. We got Redline giving a warning. We're looking at the risk index to check the volatility and how much risk is going on. So this is definitely a way to show how you can use all these together, right?
It is.
And right now is a fantastic time for a masterclass on the highly complex risk index. No, it's easy. 41. That's your medium line. That is your neutrality. If we go above that, you're in volatility. The further you go, the more volatility you're at. If you go below 41, the more safety you're at. That's it. It's easy. You can look at all the different patterns and everything that goes along as well, but that's the basics right there.
It is. And that is a strong move we're seeing.
Yeah, that is a jump.
That is a jump.
And then a sustained jump. It's staying up there.
It is. It's a really strong move and it's quite significant. But what we need to do is we need to understand how it fits in with the prediction that we've been making. So what we need to do is we need to understand how our existing prediction that we've been making now fits in with this.
Excellent. Let's see that. Using these tools together. Look out.
This is our live Euro US dollar chart. And we've already shown that we're making predictions from the Twitter page that we'd expect price to be down here, down at 1.077 from 1.93, 1093 in this area here. And what we can see from the shapes, we have these shapes here, and because they're of these pointy parts and they have made several dips into here, we are expecting price to carry on heading lower into this area here. And we have already made progress from the Twitter posting that we've had. And given that we've got this shape, which is the price will not go here, we are expecting it to be in this area down here. So everything is telling us that we should see euro-US dollar coming off. That should mean more stocks coming off. And that isn't going to last. It isn't a big crash. It isn't going to be a very long-winded thing. At least that's from our perspective at this time.
Right. And how does the warnings that we're seeing on MKTRedline play into this?
That's a good question. Well, when we see big spikes on MKTRedline Pro, we normally associate those with dollar strength. And that would mean that the price on euro-US dollar goes down in this case, exactly where we said it would a week and a bit ago.
Well, you know, we always say things can change because, you know, the market's not written in stone, but this is a little bit more of a reinforcement as to where we say it's going to go.
Let me show you this. This is euro-US dollar from a wider time frame than we've been looking at. And why I'm showing it you is that this pullback that we're seeing was started to be forecast back in July with these elements here. So it's not a surprise. This is not a surprise that it's going to come down into this area up here, in this area here. It is not a surprise.
So if you're a long-term trader, this is what you're looking at. We also look at the other things and do the short-term predictions all the time. You can use both.
Oh, yeah. Imagine if you were an options trader and you could call options. You could be calling prices like here when we forecast a 1.1288 area and it missed it by 34. But as an options, you could do levels near that and you would have made bank with that.
I always like to hear that.
And obviously, this isn't advice.
Past performance is no guarantee of future results. This is not trading advice.
You're right, Ben. He agrees. Okay, everybody, that's it for today. We aren't saying the sky's falling, but we are saying watch your money. Be careful out there. It's looking a little rocky, but thank you for joining us. Make sure you check us out on Twitter, like, subscribe, all that good YouTube stuff, and we will see you next time. Thanks a lot. Hey, and also, Leigh's waving his phone there. Don't forget about him on Twitter. He's a great guy. Go chat with him. Go look at the predictions he's doing. It's all in fun and serious money as well. So everybody have a good day. Bye-bye.